Good morning. Wow, it's such a lovely, lively crowd. All right, here's what we're gonna do. And I'm the newbie, so you can all hate me later. Could we just maybe look around and combine a few tables? Like, I know there's, ladies, do you have empty seats? Ladies, do you have empty seats? I think this might have a couple of seats. It's important that we're all sitting together because we do have a game at the end also. All right. Well, I'm Ashley Abbott, for those of you who don't know who I am. I've met some of you, and it's been a pleasure thus far working with the Chamber. I appreciate Naomi being patient with me and possibly missing a very important meeting last month that I just didn't even know about. Well, I did. I did know about it, but it's my fault. Let's see. So I am very thankful that each of you are here this morning, though. We are going to be covering an important topic. Today, we're joined by a few of our financial coaches and experts who volunteer with the Chamber on behalf of the Midlands Minority Business Accelerator program, who are here to share invaluable financial insights to help your business scale. The Minority Business Accelerator program is designed to advance economic inclusion across the state of South Carolina by helping to reduce the economic disparities experienced by minority-owned businesses. This initiative provides opportunities for economic growth and prosperity for high-potential minority-owned firms. MMBA is the Columbia Chamber's major economic development tool designed to make minority businesses more competitive. Participants in the Minority Business Accelerator are each paired with business and financial coach like those here on our panel today. Before we get started hearing from them, though, we want to thank our amazing sponsors. Steve is not here this morning. He's with Blue Cross Blue Shield. If we just want to give him a round of applause. And also, are there any new partners here? I don't know if you're new because I'm new. So if you are new, could you stand up so we could recognize you if there is anyone here? Naomi, is anyone just not standing up on me? Okay, perfect. Really fast, a little bit about myself and what I do. My husband and I opened Biddy & Bo's Coffee. It's downtown in the Vista. It's on the corner of Gervais and Park Street, where the old marble slab was located for 18 years, is what I've been told. Biddy & Bo's only employs special needs. We have 38 employees that are from our special needs community. That is the basis of Biddy & Bo's. If you have not been, I don't want to spoil it too much. I encourage you to go in. It's very sweet. It's a lovely environment. And that's all I'm going to say about it because I don't have a box of tissues and I will start crying. So that's, if you need a little pick-me-up in the middle of the day, though, head down there. And you won't just get a pick-me-up by a drink. You'll get a pick-me-up mentally and just, it's very encouraging, I promise. But it's my pleasure now to introduce the moderator, Ms. Pam Green. She is the director of the Richland County Government Office of Small Business Opportunity, and Pam has extensive experience in supporting small businesses and will guide us through today's conversation on financial literacy. And she's going to take over now and guide these four young men up here.
Good morning. We're feeling good. It's so beautiful outside, y'all. We got to perk it up, really perk it up. As she stated, I am Pam Green. I am a financial coach with the Midlands Minority Business Accelerator program. I really want to dive in today to talk about financial resources for small businesses. So we're going to jump right into this because we have a great panel of resources. So to get us started, I would like for each of you to kind of tell us a little bit about who you are, where you come from, and a tidbit of what you hope to be able to offer as nuggets to the folks today. We'll start with you, Alan. I'm starting with you.
Good morning, everyone. So as Pam said, my name is Alan Brown. I am managing principal and business partner of Lionesque Capital Management. Lionesque Capital Management is a boutique small business management consulting firms, primarily focusing on small businesses in revenue who have revenues of 200,000 to 10 million. And basically, what we do is we are those businesses' accounting department. And so we help install systems, processes, and procedures in relationship to the financial components of those businesses. What we found is that those businesses typically are the ones that have the trouble getting access. And I'll leave it there because they have trouble getting access to everything, particularly because they don't know what they don't know. And the number one thing they typically don't know is business math. And so that's what we do. And I'm really happy to be here and participate with the panel.
Thank you.
Hi, I'm Rusty Griffith, and I have Peloton Partners. It's my own entity. And what I do is fractional CFO work, which many of you may be familiar with, and the name itself kind of implies what it is, as well as executive coaching and mentoring. I've been involved with the MMBA program since its inception. So I just finished with my third cohort. I think they graduate in about a month. Great group of people. Each time it's been a great group of people. But what I tend to do is work with companies that are in the $1 million range and up, as high as 50 million. They're typically the ones that need some sort of financial expertise, someone at the C-suite level who can kind of help guide the company through some of its growth spurts that it will encounter. So I kind of fit that role. They don't necessarily have the wherewithal to afford to pay a full-time CFO, so that's where I would step in. I think from this panel today, you're going to get a lot of insight into some of the things that you should probably be doing well before you need to do them. And that's a real important piece of this growth puzzle, is knowing when to do certain things and what those things should be.
Good morning. My name is Jim Johnson, and I am a business consultant with the Small Business Development Center, better known as SBDC. Great acronym. I'm an employee at the University of South Carolina, and SBDC's, if you don't know about SBDC, it's an SBA resource partner. So we work closely with the SBA. At SBDC, we hit kind of a different target, or a little bit of everything, honestly. So the pre-venture startup, a lot of pre-ventures come to us, have a lot of questions, interested in how to get up and going. So work with a lot of those folks. But also existing businesses that are poised for growth, and some that have problems, trying to work things out. Get a good many of those. So a little bit of everything. My background is I was in small business for over 20 years in medical supplies and restaurants. So yeah, I was down in the trenches with the restaurants. Learned a few. I always say I have a master's degree in hospitality just from owning a restaurant. Yeah, but good times. I always ate really good. I know that. Maybe didn't make money all the time, but learned a lot of lessons. But yeah, this is my first cohort with the program, so I'm excited to learn more about the program and the folks going through it and offering my advice. And some people take it, some people don't. But try to do best we can.
Good morning. My name is Bill Mason. I work with First Community Bank, and on the wealth management side of things, I'm a certified financial planner with them. I just finished my first MMBA, is that the way to say it? And I really, really enjoyed it. You get to know somebody personally, you get to know them, within their business as well too. And so we really enjoyed that program. It's a really good one. And Randy, like he said, he's been doing it since they started. So I'd like to do it again as well. But what we do is we help out individuals, with a little bit of money. We help out individuals with a lot of money. We also help businesses as well too. We manage, without saying the people, just we manage over $900 million. So we've got clients with a little bit. We got clients with a lot. We deal with small businesses. It's good. The way I typically try to tell people, it's kind of like financial accountability. It's good to have somebody to walk with you to kind of be that rational side of things, because especially when you're starting a business, there's this excitement, and you sometimes forget the really important stuff, and you just look at the tax deductions or something. But Bill Mason, First Community Financial.
Thank you. So you can see you've got a diverse panel. So I'm going to start with Rusty on this. When we think about a lot of our small businesses, they definitely know their craft, they know their services, or they know their product. What are some of the key financial metrics that a business owner should be checking or tracking regularly, and how can they use them to kind of better their business?
That's a good question, and it starts with having good numbers. That would be dependent on your accounting system. If you have a box full of receipts, you're not going to get any ratios, no metrics at all. But having an accounting system, it doesn't have to be that expensive, but have the numbers there that you can work with, and make sure they're reasonably accurate. They're not just numbers that your mother put in because you needed her help and she said she would do it. I've seen that. So where someone who was not an accountant was doing the accounting, and it was quite a mess. At any rate, so there's going to be basic metrics that I will call lagging indicators. Those will be things like your sales growth, your accounts receivable turnover, your return on investment, your net profit margins, and your gross profit margins, current ratios, things like that you can look at and you can see trends over time. And looking at each one independently for 1 month isn't going to tell you a lot. You have to look at the trends, so make sure you record that, and graphing it is a nice, simple way to do it. More importantly, I think you need to think about leading indicators. Leading indicators will tell you where your lagging indicators are going to go. And as the name implies, these are indicators that you see before the end of the month. It might be the number of sales calls that your staff is making. It might be something peculiar to a specific business, where you look at certain activities and say, if we do these activities, I know it will increase my top line. Those are things that you have to figure out for your individual business. Simple example would be, and this is not a direct financial statement implication, but it does have financial implications, is the case where a company was having a lot of safety issues in their warehouses. And so they kind of paid attention to that, and they realized that people weren't checking out safety kits before they went into the warehouse. So they started measuring how many kits got checked out every day, and as the number of kits went up, the number of incidents went down. Pretty standard, logical when you think about it, but it's those things that you look at and capture that'll help you determine where your business is going to go, not where it went.
Thank you. You want to chime in?
Yeah, and sometimes what happens on the back end, as Rusty talks about in relationship to the lagging indicators, is that you don't know what you don't know or what you're going to need in the future. And so by not being aware of key performance indicators or metrics like leading and lagging indicators, when you get to a funding institution, they use metrics to determine the health of your company. And those metrics, when they come back and talk to you about it, you have no idea where they are. Two of the metrics, financial metrics that we use, three of them that we use in lending that are particularly important to small business owners is, guess what, your business credit score, your personal credit score, Those things are important metrics that you need to be monitoring on a consistent basis. And those are outside of the company. Inside of the company, from a financial perspective, Rusty mentioned current ratio, right? We want to know what type of liquidity patterns the company has, particularly because we're concerned that if you can't make our monthly payment, that you have some source of funding that you're generating internally that can serve as a secondary source of repayment. Right, and then connected to that is your ability to repay the loan, which is measured by a metric called the debt service coverage ratio, where it's basically the amount of net income you have on an annual basis divided by the portion of that debt in a year that you have as well, right? And so the goal, ideally, is to have $1.25 for every dollar of debt you have in an annual period.
Add just one thing. If you go to Investopedia.com, you'll see all of these ratios explained. Just look it up, and everything that Alan just talked about, you'll find it there, and you'll find the formula and the definition.
Okay, thank you. Either one of you want to add to what Rusty and Alan have stated?
Yeah, there's a lot of key metrics, and they're individual for organizations as well. There's some that are general, like your gross profit margin, bottom line, net profit. Pretty important, cash flow, how's your cash flow working? These are all things you need to be keenly aware of, but Rusty mentioned you need to have good records to begin with, so you can't get any of this information out and I've seen chart of accounts set up incorrectly. It's good to have some type of an advisor maybe in the setup phase if you're just getting into maybe a more robust accounting system, because if you're not setting up your chart of accounts correctly, and these are basically the categories on your income statement, you're going to get inaccurate information, or information that's a little muddled. So just working with your bookkeeper, your accountant, to understand that everything's set up correctly, or a consultant, someone that kind of knows what they're doing, is important to capture those metrics. And every industry is different. Just an example, the restaurant industry, they mentioned a couple ratios. Restaurants, food costs are very important. That's a huge metric. And also labor. Together, food costs and labor make the prime costs, and there's a certain ratio that you should be within to cover your overhead. So, you should be aware. You can get reports from a lot of folks. Consultants can pull reports to help you understand where you should be. And even within the restaurant industry, you have full service, limited service, quick service. So you're going to have different ratios there. So understand your industry and what your ratio should be there, and track those. And I think you mentioned maybe more of you want to look at them monthly, but quarterly you probably get a better idea, because things can kind of smooth out over a quarter. But yeah, and then we'll get into more, I guess, tips about budgeting and things like that a little bit later.
I'll share two personal experiences, one where I screwed up and one where I made a good choice. The first one was the screw up. I just didn't understand my business entity. And so I had an accountant. I was like, oh, that's great. I got a CPA. That sounds very fancy. But I didn't understand a flow through. And so come the tax bill the following year, I was like, hold it. I was saving all this money. Now I got to give it back. I don't understand this. So understanding your business entity, getting with a mentor, getting with a good CPA, somebody that can kind of walk with you, I think is really, really important. And then the thing I did right after that is I started a second business, and I had a stay-at-home mom. She's a friend of mine. And I said, well, you do the books for me. And she said, yeah, but I don't know what I'm doing. I'm like, great, I'm going to pay for you to go to Midlands Tech, and you're going to take a class in QuickBooks. So she became very efficient at that. And it didn't cost me hardly anything, but it sure did clean things up, because ledgers and all these different things, I was going to mess it up, I'm sure. But that would be my one.
Okay, thank you. Which kind of leads us into another question, or the next question. You talked about chart of accounts, you talked about a consultant, bookkeeping and all that, but what are some of the common financial mistakes that you see business owners make kind of early on, and then what can be done to avoid it? So let's just think in the case of, early stages, maybe they're not in a position of having a consultant, but, here are the things they need to really be thinking about as far as making sure they're set up properly.
Yeah, so I'll start this one because I was wanting to chime in, but I said that's not the question, so I wrote my question down, and it was about mistakes connected to that.
Okay.
And most of the panelists have already mentioned the importance of good record keeping. Mm-hmm. Good record keeping. Who was in business in the room at the beginning of COVID or during COVID? Show of hands. Y'all that shy? Okay, 4 people. Of the 4 people that are in the room, I'm sure you remember the PPP, EIDL, restaurant recovery, all of that stuff, right? And by large, the primary issue that I saw, because at that time I was working with the SBDC, that prevented people from taking advantage of having access to those funds where they didn't have financial statements. And so having to go back and recreate something, right, in order to take advantage of something somebody was willing to give to you and give or loan and then tell you they were going to forgive, was a major challenge for a lot of small businesses during that period, and caused a lot of them to end up going out of business, right? And so one of the primary mistakes I would say that small businesses have, especially early stage small businesses have, is that they don't get outside eyes or outside assistance, particularly as it relates to the financial matters of their organization.
Rusty?
One of the things that I would say is don't get upside down. It's very easy to do up front. Now, there's certain investments you have to make, especially if you have to buy equipment or supplies, something like that. But what you don't want to do is have your cost, all of your expenses, accelerate faster than your sales growth, because you can quickly get upside down early on. And it's hard to recover if you've got lots of payables, you've got credit card debt, you've got a loan, and you've got expenses, and you're trying to get the revenue to cover that. So be careful about getting upside down. Think of every dollar you spend as an investment. What's the return I will get by spending this dollar on something? You need to think like that. The other thing is, especially if you have a seasonality impact in your business, you've got to anticipate that. And you anticipate that by establishing cash reserves. So you don't want to spend everything you get. You do want to set money aside. And part of this, too, is working with someone like Bill, who will help you with your outside investments, the things that are not related to your business, but they're more related to you personally, so that you might have cash reserves outside the business as well. But he can, help guide you through that aspect of it, working typically with your accountant or CFO, whoever you have internally, to make sure that you have that established. But being very careful with your cash. Cash is your lifeblood. You don't have cash, you don't have a business. It's that simple. So manage it like it really matters.
Yeah, that's a good note to end on. Cash. It's pretty important, and people underestimate how much cash they need in the beginning phases, and it's really hard to determine. And our favorite word after COVID is inflation. Things have just cost a lot. It's crazy, but I think that's kind of flattened out lately here, so that's good news. But things are going to cost more than you think they are. Doing your research in advance of starting businesses is important, and understanding the real cost of business. And having, Rusty mentioned a reserve. If you can come in to a business with some savings, some cash savings, and really do some good planning in advance and understand how long that cash could last, because your revenues are going to ramp up slowly, and you're going to have some expenses until you can get some income, and hopefully you have a good model, and the business produces income. So yeah, having that good reserve or that cash savings in advance that is adequate to carry you 6 months or whatever period of time you determine is adequate. There's a lot of tools out there to help you through some of these. Whenever you go for debt funding, which is getting a loan, there's an expense to that. And in the startup phase or early phase, it's a little riskier. So it's going to cost you more. In some cases, it's harder to access that funding. So you can come to folks like Alan, who might could help with access, because there are places you can go and things you can do to access funding. Just keep in mind that's going to be an extra expense. It's going to cost you. So the best position is to come into something with a lot of cash, be able to grow it with very smart debt, which I think we'll probably get into a little bit more. But yeah.
Thought you were done. I'm sorry. Mine, I've never met a small business owner or even a large business owner that wasn't excited about their business. And most people, when they're starting out, they're tremendously excited. Whatever the creative thought that came to their mind or the talent that they had to bring to the table, and within that excitement, you get lost and you forget all the different hats that you have to. So I'd say know your hats, because a business owner wears so many different hats. And honestly, they leave a bunch of them to the side and they go where their passion is, and they're out just, making everything, oh, this is great, and they forget the financials. And you got to look at those, and you got to be honest with yourself and say, where am I weak? I don't want to deal with this area over here. So the mistake of a brand new business owner is, I would say, they're just excited about and they're passionate about the concept. But they got to kind of pull it together, get organized, and then start looking at how are they delegating their time as well too. And so knowing your hats, knowing where your responsibilities are, and taking time to not ignore, especially the financials. Those get ignored because they're like, I'll get to that.
So I heard something, because this is a great pivot into this. We talk about cash is king kind of a thing. Let's just say we have businesses that may show on their taxes where, they've got a profit. But let's talk about cash flow. And let's talk about the importance of cash flow. And I know there are some industries where, you may need to track cash flow daily, depending upon the industry. But let's speak to cash flow and the importance of that in your business.
So Pam, you mentioned cash is king, right? I think in the accelerator. Don't get ahead of me now. In the accelerator.
Cash is queen.
In the accelerator, we say we emphasize the importance of cash in a number of ways, right? Facilitator Wendell talks about, whenever you make an investment, you spend a dollar in your business, you want to ask yourself, how is that dollar coming back with cousins, right? It's going out by itself, but it needs to bring somebody back with it. Also talking about cash is not only king, it's queen, but it's also the keys to the castle, right? And so all your activities, primarily should be focused around how quickly can I generate cash inside my business to be able to sustain it and get to the next day, the next week, the next month, the next year, so that we can effectively, sustainably serve the people that we want to serve. Jim mentioned model. I don't know if you all heard him mention the term business model. I think one of the mistakes that entrepreneurs make is that they get so excited about starting a business and having an idea for the business that they really haven't vetted the opportunity to determine if if it's profitable and can generate cash at the level it needs to be sustainable.
Yeah, so we'll assume that the business that you're starting or the business you're running, there's a gnat up here that keeps. Yeah, we're not going crazy up here. That you can make money with it. You can generate cash with it. You generate excess cash. That's cash beyond your expenses. One of the things that you don't often think about is the controls you need to have in place around cash. If you're the only person in your business, obviously you can just guard yourself, make sure that you put the money where it belongs. But if you're hiring employees, and employees are handling cash, and this is an example actually from the restaurant industry, a client that I'm involved with had, I won't mention the type of business, but it was very much cash-based type of business. And what happened was the manager was creating voids and credits for cash transactions and then taking that money and diverting it to his or her pocket. That's not a good thing. The problem with that is that there's no oversight, there were no controls in place to say who can do what at that location, because there were a number of locations. So you have to make sure that the cash that goes from the customer's hands into your employee's hands goes into that cash drawer and then goes into the safe. And you don't do that with one person. You're going to have at least two people who are managing that. So it's going to be double counted. You're going to make sure it's secure, access to it is controlled, that sort of thing. So be mindful in your business if there's an opportunity for someone to be able to pocket cash that really belongs to the business, because it can take a while before you realize that you're not getting all the cash that you should have. So think about that as well.
I think the business model determines a lot about, how you manage cash flow. When I was in medical supplies in the healthcare industry, that's a big accounts receivable. You bill Medicare and Medicaid, and you wait 30, 60, 90 days to get your money. That can create kind of a cash crunch. So in those instances, you really have to plan, and it's kind of along the same lines of a seasonal business, understanding the ups and downs in the industry seasonally. There's tools out there to help you manage that, such as lines of credit, that you can get from banks, which are very helpful, usually more inexpensive. But do it when you don't need the money. Set up that line of credit when everything's good, get a good rate. You don't have to tap it unless you need it. But then, when something comes along, Medicare comes in and does an audit and says, oh, we want to hold this money for another, 60 days. You might tap that for a little while. And so those are some, helpful tips. Everybody doesn't have an accounts receivable or extend credit, but those that do, will have to manage it that way. The other thing I think a lot of people the first place they go to is cutting costs, to maybe increase cash flow somehow. You just have to be very careful how you cut costs and, not cut value, I guess, because then you'll start losing customers. And the restaurant industry, you can see it pretty quickly when people start cutting costs because the quality of the food goes down or the quality of the service. Those are kind of simple examples, but, it applies to any business. And you just be careful about the cost cutting. That's something you do over time, hopefully not quickly or reactionary. Create efficiencies in your business, which, result in cost reductions that help out. Think about that strategically. That's where the business plan, I don't know if we mentioned business planning yet, but maybe we've alluded to it. That business planning on an annual basis, updating your plan each year, understanding what new efficiencies can I employ this year, and how is that going to reduce costs, and where might that lead, and how might that affect the cash flow. So couple things to consider for cash flow.
Mine would be, what's your make it, break it number? Especially when you're starting out in the beginning. You may be starting out and you already have that big sale or whatever it is that's bringing in the revenue, but most businesses operate month to month, and guess what? There's 12 months, and you did one good month. So you might want to look at the other 11. How am I going to fill those gaps there as well? And I love what Randy said about some, and a lot of businesses, there's seasonality, and you said it as well too, Jim. And if you can figure that out, that helps you out a lot. When I ran my other businesses, I always thought of it like a racetrack, and it was the calendar was going around and around and around. And did I have potholes in the racetrack, and could I fill those with new sales? And so as soon as I got that 1 month filled, I'm looking down the road, going, okay, what's month 2, 3 down the road, and can I go ahead? Because guess what? Your employees are expecting you to fill those gaps, and you can't just be enjoying the moment of, hey, we're doing great this month.
Right. Very good. So as a business owner, how can I determine what would be the best financing options and what other options or what options are out there for a business owner? Let's just say, I'm tracking with cash flow. I've got my statements that I'm kind of understanding to some degree my ratios. So what options are available? And then how can I determine what's really going to be best for my business? And we got about 5 minutes.
Oh, yeah. That's a loaded question, right? Because the real answer to that question is the question you always get related to this is, it depends. It depends on the specific circumstances related to that business, where it is in the cycle. And quick example is I have a customer who 12 months ago would have never qualified for any funding except high interest, merchant cash advances that, really try to get their hands into your financial affairs and take control away from you. But now that company's in a position where we're looking at some community development financial institutions whose borrowing requirements are not as stringent as traditional lenders, but we're also looking at some traditional lenders that might have some opportunity or products on that tier, right? And so it really depends on all that other stuff that we've been talking about, how that comes together in relationship to determining the health of the organization that determines the funding mechanisms.
I want to break that down real quick. So let's think about it from the perspective of, let's think about traditional financing and then alternative financing. So there are cases for businesses on an alternative side, and so talk from that standpoint to kind of help guide businesses as to, how do I?
Right. Well, the first thing you have to consider is your type of business. There's certain types of businesses that some investors, alternative sources of funding are attracted to, and it's part of their portfolio, and there's some that aren't. But I would say before any of that starts, whether you go traditional or non-traditional, you've got to establish a relationship. If you don't know the first name of your business banker, then you need to go and visit that banker. And it's the same with if you have a business that is something that could grow to really big numbers with the proper investment. So you're talking about, you're talking about venture capital type investors. You might be talking about lenders who step in when banks don't. They're non-traditional lenders. You need to establish relationships with them way ahead of time so that they get to know you, because they will invest in you before they'll invest in that company. And I say that because I have a background in venture capital, and we always looked at the team that was in place. A good team can turn a bad product into a success And a really bad team can kill a stellar product. I've seen it. So you want to make sure that they get to know you personally and any other important managers or executives in your company. Establish that relationship. Let them know you. And assuming you have all the numbers correct and you've been monitoring things, you can go to them then and say, hey, look, I think I'm going to need business. And he or she will say, well, let's sit down and talk, because they know you. And that's key in all of this. It's the relationships that you build.
Yeah, I'll second that. It's like a marriage. It's a business partner. Your business partner's with the lender. And trust is a big part of that. They need to trust in you and your business, and you need to trust in them. You're getting into a relationship, and you will spend a lot of time with lenders, communicating with them over the years. So it's important. There's a lot of different products out there. We mentioned, conventional banks. When you're a startup, conventional, it's risky, right? So it may be tougher. It just depends on your financial position as a borrower. And, but there's products out there to help mitigate or overcome that. SBA is one. We work with a lot of SBA 7A and 504 loans. SBA is there to reduce the risk of the lender. So in the case of a startup, it's kind of a red flag for a lender. They'd have to be pretty confident in your proposal. But the SBA can come in, kind of ease their, what they're thinking here and the risks. So SBA is great. It comes with, there's benefits and drawbacks to everything, as you can imagine. You can get some pretty good terms with SBA, so like the 504, you can go out longer, reduces your maybe monthly payment, and can increase some of your cash flow. But one of the things about a 504 loan is that you can't refinance it for 10 years. You're kind of locked in, but it does have kind of a lower than average rate. So you have to look at every financial product too, and every lender, and see how it makes sense. But there's a lot of good lenders out there. There's probably one for you. If one says no, another one might pop up and say, yeah, well, we'll be happy to work with you on that. So don't think that there's not a lender out there for you.
The only one I would add that's a little bit different is a collateralized loan. So maybe possibly you inherited quite a bit of money, and instead of dumping it into the business, it might be more advantageous for you to actually take a loan against that, let it continue to grow, and benefit you. So that'd be one I'd add.
Thank you. So I want to give the audience a chance to ask any questions, and then we'll end with one last question. So does anybody have any questions of our panelists? Oh, I thought you were giving this for me for like a double. Any questions out here? No? Okay, then that means that you guys definitely covered everything. So we'll do a quick lightning round, like literally less than 30 seconds, like a pitch. But can you share some brief insights on probably, I don't want to say the best way to structure your business for tax benefits, but maybe the differences in, let's say, an LLC, S Corp, C Corp, as it relates to the tax benefits? 25 seconds.
That's a tough one for 25 seconds.
25 seconds, okay. Most businesses that start are going to be LLC because they're very simple to start up. It costs about $100 and $110 to do it, and you're in business. You get your website, everything's running. It is called a pass-through entity, which means that the business itself is not taxed. The profits of the business pass through to your personal tax return. So it's pretty straightforward, pretty simple to do. You can elect as an LLC to be taxed as an S Corp. S Corp is a little more flexible in terms of having investors. You can have up to 100 investors, and there's certain restrictions on that. That's also a pass-through entity, but if you've got investors, some of the profits will pass through to them as well. And there's some other tax considerations. C Corp, you hear about the double taxation. It's a double taxation if you pass dividends on to the shareholders, that they get taxed on money that's already been taxed. So that could be advantageous in certain circumstances, but you need to talk to your CPA, the one who does your taxes, because they're going to be most intimately involved with your business and understand where you can take advantage of tax savings based on the type of entity that you have.
Yeah, I'll just mention real quickly as well. One of the big decisions is you can, file as an LLC or register as an LLC, but that big decision going from sole proprietor to S Corp, that's something you have to determine. You can do that anytime, usually end of the year. You'll have to determine that, and what happens is you're paying self-employment taxes as a sole proprietor, even if you are an LLC. And that's a little bit more expensive, but once you start really generating some revenue and income, you can pay yourself a little bit differently as an S Corp, so it would make sense maybe to transition there. Some people do it right off the bat, others kind of wait, but that's definitely a discussion for your CPA or accountant.
And I've had clients that did just that. They started off as an LLC and then transitioned. The main thing I would leave as it relates to taxes is don't let the tax tail wag the business dog. I say that again. Don't let the tax tail wag the business dog, right? And by that I mean, right, make your tax decisions in relationships to how you need to best operate your business, not make your business decision as it relates to how you're going to minimize your taxes.
Okay, so we're going to repeat that. Don't let the tax
Tail wag the dog.
Got it. Okay.
The business dog.
The business dog. Okay, I got to remember that. And I'm going to use that. I'm going to give you credit once, and then after that, it's all mine.
I mean, I've done the same thing for you, so
Okay, awesome.
It works.
Awesome. Let's thank our panelists, Al, Rusty, Jim, and Bill for the information. Thank you, guys. This is definitely great I hope you guys found it beneficial. I'm going to turn it back over to Ashley.
Thank you again. I learned a lot. That was very beneficial. Thank you. We have about 10 minutes, right, Naomi? Five. Great. So you have 3 questions at your table. The idea was to get together with the people at your table and kind of meet them if you haven't. Number 1, what is your name, your organization, business, your title and role? Number 2, how can you help small businesses? And then number 3, I'll let you read that. Since we do have 5 minutes, why don't we, Naomi, is it okay if I just kind of, maybe let's just skip over number 3 and okay. Let's take like 2 minutes then at your table and just you quick meet the person at your table, get their name, who they're with, and what their title is. And then we'll do that. All right, if we want to take about 15 more seconds to wrap it up. Thank you. No. Thank you. Is it on? Is it on? Yes? Yes. Okay, great. All right, so I'm going to pass this microphone around. I will start with Miss Pam at this table. If you will just pick one person from your table to introduce you and yourself, your business and your title and your role, and we'll just stop there. I'll let you start, Miss Pam.
So I'm introducing both of us. Okay, I have Barry Robinson, and honestly, he could better introduce himself because he's doing a lot.
But he does have a business where he was doing tourism. But the big thing is that he's a part of the electric vehicle world, where he's trying to educate the communities on the electric vehicle to basically be more of a greener environment. So he'll be setting up events across the U.S. actually, or just across the state. Okay.
I'm already in South Carolina.
Okay.
On the East Coast at this moment because you're good as your employees, and I'm just one person.
Got it.
I have a team we're putting together. And I want to go into it. We have a few minutes. But I come here today to listen to my staff here, and they educate.
We can barely hear you.
Yeah, I'm sorry. As a coach, I think I can talk over everybody. The panel I want to thank you guys because when I sat here, I said, well, I'm in here for it. They said, well, I want to become a millionaire business. But you guys started off saying, I got 250. I said, well, I ain't got 300 yet. So, in other words, thank you guys. Okay, I learned a lot.
So think electric vehicle, greener market, and then I'm Pam Green with Richland County. They already introduced me, so I don't really need to tell y'all. So I'm gonna pass the mic.
Yeah, but while that's happening, I did want to say there's somebody up here that could help you, right? So Jim, you don't have to wait to generate $250,000 to get some help from the people that are up here. Jim can help you right out of the gate.
Hey, good morning. Thank you again. I know most of you, and thank you for being here. I'm with Palmetto Citizens. My name is Debbie White. I am the commercial lending manager. So I value what you're saying, and I know exactly what you're saying. And of course, I wish I would have recorded it so I could just hand it over to some of my clients at times for them to hear the importance of when they're starting a new business. But I'm here also to introduce Anita Murphy. She's with Grow Financial. She is the VP of Operations of their retail division. She's been with them 11 years, I believe, and she's located at Sand Hills. Yes. And then I have Laura McKinney, and she is actually with the Columbia Chamber, and she's in their community development. Talent and workforce. I'm sorry, I didn't write notes. I'm going off of what I've got here. But again, thank you all for being here.
Hi, I'm Evans Khan, and Aaron Lee here. We just catching up. We met a couple of months ago up here, and he kind of reminded me that he does furniture business, office supplies, things like that. And I said, I need you, because when you walk into my building in Gannett Island, there's really nothing. And so I really need to outfit that space with some chairs, some plants, because right now it's just all master. And so we want to try to get away from that. I'm Evans Khan. I'm a fuel distributor, and we do a lot of fuel across the country. And but I want to just kind of go back to the four horsemen up here. You guys, I got a quick in my neck because everything that they were saying, everything they were, I've been through it, I've experienced it, and I think the best way to start a business is having a good CPA, starting with a good a banker, and really knowing your business, and actually getting that CPA and that banker to understand what kind of business you're in. Because if you have the wrong CPA, you will end up like me, $50,000 owed to the IRS. And so it really was very impactful of what you were saying, and I just commend you on the actual just kind of letting everybody know. I think more businesses that start off really need to have
morning, everyone. I got my cheat sheet here. I have David here. He's a senior accountant. He helps businesses be proactive versus reactive. I also have Michael here with TD Bank. He's a small business relationship manager. And then myself, I'm Nick with Carolina Conditions. We're a home service company. Definitely appreciate what I heard here today. We're kind of all those things we've got to hear about being seasonal, cash flow with tons of high-end material costs, all different types of labor rates. So a lot of this is very helpful. Appreciate it.
Hi, I'm Hannah Matthews. This is Brittany at my table. She's with Beer Keller Columbia, which has been around for about a year. I don't know if y'all have had the chance to check it out. It's a cool place, but she does business development for them. So she works heavily to support nonprofits in the area, which is what I just learned. Again, I'm Hannah Matthews. I'm with Apple One Employment, and I help candidates that are finding jobs, help connecting them with opportunities, and of course we help those businesses that are hiring find the candidates. So we staff for office-based positions, sort of bridging the job seeker and the hirer or employer. So yes, we support small businesses that way, of course.
Thank you all. I know Naomi and I met yesterday, and one of her biggest concerns, wishes, is that we could double, triple, quadruple this group. So to that point, this is my first meeting here in this space, and I do see what she means, how we have this beautiful large space that we would love to fill. So our next meeting, Naomi, is in November, and if you could just put out to your friends or other people that you know that own a small business that we have this, we would love to have them. And I know it would just beef this group up, and just the small amount of time that you all just networked with each other, I think you got to know some people, and they could be of value to you, and you could be of value to them. And that's what this is about. I'm not going to let you four introduce yourselves again, if you don't mind, since we have heard from you. For the sake of time, too. Miss Debbie, would you come up and do our door prize?
How you know I want to be the one?
Well, it's just
I'll do it, though.
kind of odd. All right, and we have, I don't have glasses on, is that Brittany?
Brittany
Jacobson.
Yes.
Yay!
Naomi, is Miss Brittany going to come? Perfect. Or Hillary, I'm sorry. Hillary? And we are almost done. We're just going to go over a few upcoming events.
All right, I'm going to stand over here and use this mic so I don't get any feedback. Hey, good to see everybody this morning. My name's Hillary Bell. I think I've met a lot of you in the room, but there's a few faces I don't recognize. So I'm the director of events at the Chamber. I get to oversee all of our big flagship events that we do, as well as some of our weekly networking and programming type events. So just go over a couple quick things with you. Thank you so much to our panel for being here. We really appreciate you taking time out of your morning to be with us. And so a couple upcoming events that we have. We have our partner engagement this Thursday. It is our networking after hours events. It is free for Chamber partners. We're going to be at Still Hopes Episcopal Retirement Home. And when you hear retirement home, you get a connotation in your head. But think resort, retirement resort. That is where our partner engagement is going to be on Thursday. They are rolling out the carpet for us. We'd love to see all of you there. It's from 4:30 to 6:30, right across the bridge in West Columbia. And so it is a drop-in, so come, get a drink, get some food, hang out, meet some people, and head on your way. So we'd love to see all of you there. We have another big event coming up. It's our it's actually our 5th annual Sporting Clay Tournament. It's going to be Wednesday, November 20th. You don't have to know how to shoot to be there. We will go over the basics with you. It's a great time. We have some competitive people. We have people who have never shot before in their life, and we make a full, fun day of it. So we'd love to see you on November 20th. Please reach out if you have any questions. Let me see if I missed anything. We have, our welcome breakfast for the new general. We have an opportunity to welcome the new general at Fort Jackson to the business community. That is going to be Wednesday, November 13th at Doubletree. So we would love to see all of you there. More information on the website for that. That will be a full hot breakfast. We have a little bit of everything, and we would love to see everybody there and welcome our new general to Fort Jackson. And then we have a couple ribbon cuttings you can check out on the website. And then also, we are still accepting nominations through the end of the month for our Small Business of the Year Award, 2024 Small Business of the Year. Please, we would love for you to self-nominate if you meet those qualifications. We'd love for you to nominate another business if there's somebody that you would like to recognize. We want to celebrate all of our small businesses and the hard work that you guys are doing here in the community. And so please go nominate. We will be presenting that award next month at our November Small Business Breakout. So we would love to have all of you there. And then also, just to wrap up really quick, applications for our Minority Business Accelerator program are still open. So you got to hear from some of our wonderful coaches and participants and different people who are involved in that program. And so nominations are open through the end of the month. If you have any questions, please reach out to any of our staff members, reach out to Naomi, check out our website. We would love to have you be a part of that program. And just let us know if you have any questions about that. So thank you all so much. I hope you have a wonderful morning. I know I talked really fast. Catch me if you need anything, or check out our website, and hope you all have a wonderful day.